what's good, everybody? Welcome to the Closing Beat. Happy Tuesday, midterm election day. Hope you got out and voted for whoever you think is going to take us to the promised land and read through all your amendments and all that good stuff. Well, this is the Closing Beat. We talk about the stock market here. And we're Jazz Wealth. I'm Dustin Tibbetts with Jazz Wealth. We're financial advisors, long-term investment advisors. We are SEC registered and fiduciary financial advisors, so check us out at jazzwealth.com. But if you're not interested or don't need us, then this is just a quick update that we do for you guys to cover the stock market without the commercials and without the sort of drama and the, oh my God, what are they trying to do there? We just give it to you, the good, the bad, and the ugly, whatever happened for the day. So off to the left here, you'll see the stock market higher basically across the board by about 0.6%, depending on which index you're looking at. The Dow added 173 points, the S&P added 17, and the Nasdaq 47. A lot of that coming in the later part of the day. You can see off to this chart here on the bottom, you've got a lot of nothing to start the day. A lot of people just saying, I'll wait. You know, the markets have been a little weird lately. I'm not going to do anything ahead of the midterm election. So if you look, that's a minute-by-minute sort of projection of what the markets did up until about lunchtime. After lunch, people said, wait a minute, I've had a chance to look at the stats. I have my opinion now. I think I know what's going to happen with the markets going forward. And so you saw a little bit of a sell-off and then a rally. That's just people taking both sides of the equation. That's all that was. So we'll go over the stock market, of course. If you are following the stats and everything that have to do with this, currently the Democrats have a 79% chance of taking over the House, according to NBC, CNN, and Wall Street Journal. You know, let's leave politics out of it, but that's where the stats are. I would say that, we talked about this on the Doe Show as well earlier. I would say that, remember the Monday before the presidential election, Hillary Clinton had a 91% chance of winning the presidency, so nothing is actually 100%. Trump had a 9% chance. I guess where there's a chance, there's a chance. So although everybody's out sort of pushing their agenda today, you know, those are some of the stats that I found. Also, one of the things I thought was interesting, since 1928, the S&P 500 has averaged a 12% annual return when there's a Republican in the White House and a split Congress. So if that helps you in any way, you know, looks like bullish, right? Depending on what happens. Now, with that in mind, tonight during the election results, if you're a futures trader, you're staying up, right? This is going to be action for you tonight. Hopefully, I'll be watching, so we'll be there, of course. That's where you might want to pay attention. And then tomorrow, we got, of course, people making their decisions based on that. Okay, stock market today, we already told you what happened as far as the markets go. I want you to think of it like this. If we look over at the charts real quick, can you see the chart? Yeah. I want you to look at it like this. This is the S&P 500 on the screen. These are candlestick charts. By the way, if you have no idea what candlestick charts are, feel free to ask us for our class. If you're one of our customers, we did 3 different candlesticks classes to sort of build you up through the process, let you know what all of this gobbledygook means. But I want you to look at this one because this is the S&P 500. We have a serious downtrend through October. Horrible, horrible month. Now, that being said, what are we doing here? What's the last few days and last few weeks been doing? It's been repairing itself. So essentially, the markets got smacked, it got in a little bit of trouble, and now we're in this repair phase. However, with the Fed rate announcement coming up on Thursday, midterm elections tonight, the market's sort of not been fully unleashed, in my opinion. So I think tomorrow you're going to see that. Is the repairing that we've done over the last couple weeks going to sustain itself, or are we going to, you know, see more of a downturn? And where I'll point you to is back over here in February. We had that severe sell-off towards the end there, 10% drop. I want you to look at that and see, did the markets recover immediately? There was a 3-month time period of a lot of excitement and a lot of worry, a lot more excitement, some more worry, excitement, and then nothing, before it actually regained itself back into a confirmed uptrend if you're a technical trader. So from this point, know that there is no quick solution to what happened in October. If the midterm elections prove to be bullish, no matter what happens, I wouldn't expect this to just rocket back to highs. So anybody that thinks we're just going to recover and head back to all-time highs, you know, you got a lot to think about because you're probably not very accurate in that assumption. I want you to go back and think about earnings this quarter. Earnings have not, well, earnings have been good. Revenues have been lower. They're falling off a cliff, to be honest with you. 68% of companies beat their earnings estimates, but we said that doesn't matter. Nobody's looking at that. this earnings cycle. They're looking at revenues, and revenues have come in at 58%, which is a sharp decline. Last quarter, they were at 65%, the number of companies that beat on revenue expectations. So that's starting to decline, and it usually does not fall so rapidly. That will get headlines. It's just not being talked about right now because, well, there's a lot of other more dramatic things to talk about, and that's what sells TV commercials, right? You should know on Thursday, by the way, the Fed's going to announce their rate decision. They're probably not going to do anything. It would be a huge shock to the market if they did. We'll find out Thursday afternoon. And interesting stat, I'll give you this one here. If you take any 12-month period, anywhere you want, say from today and go 12 months forward, well, you'd have to go back 12 months to today. If you take 1950 in July 3rd, if that was a day, go all the way 12 months later, in any 12-month period, there is a the market is higher 65% of the time, the S&P 500. So if you take a look at the markets in any individual 12-month period you want, 65% of the time the market is higher. So what does that mean? I just thought it was interesting. It means that the bias is always to the upside over a long period of time. If you're looking at this and you're saying, okay, that's fine, I held off through October, I see the market rallying, all clear, I don't think so. I don't think you can successfully say all clear just yet. The Nasdaq doing the same thing, although a little bit weaker. Remember, tech is awfully weak, I think 9%. Some of these, the tech sector as a whole is still down. You got the Dow back above the 200-day. Everything's cool. However, remember, this is not just going to retrace all the way back to the highs. Okay, that's the stock market. Let's go over a couple sectors today. Transportation stocks up over 1% today. A lot of that has to do with FedEx having a strong day, almost 2%. UPS having a strong day, almost, well, 1 3/4% there. And JB Hunt, oh, that's not it. JB Hunt, one of the trucking companies, did not hang in there. I don't know if that's accurate. Must have sold off towards the end of the day. Most of the transportation performance actually just coming from the airline transportation cargo companies there. So the transports have now recovered about 8% of their entire decline. And if you look at the sector as a whole, that's 16%, top to bottom, 16%. And they've recovered about 8% from the lows there. So that doesn't sound right. Let's take a look at that. Real quick, hang in there with me. Starting in September, going back, that's not going to work. Let's look at the low here. Let's go all the way back to the highs. You got 16% there. And since we hit the low, they've recovered, almost 8%, 7.5%. So I was close. So that's the transportation stocks. Consumer staples, by the way, this is that breakout we've been talking about, continues. Money keeps moving into that sector. Remember, that is... these are your Coca-Colas, your Pepsi, things that, Colgate, toothpaste, things that people are going to buy no matter the market conditions, alcohol, tobacco, things like that. Money continues to move into that sector. And if you look down here at the bottom, this is where you go, well, it's not just Dustin's opinion. Look at the volume of shares changing hands on the way up. That is money, big money moving to this sector saying, we had it elsewhere and it wasn't going well. We're moving into this sector, or they're positioning for something that they think is to come. Oil continues its steep decline here, down another 2% on the day. Actually, it closed down just over 1%, but even after that, it finished down 2% after the close. Oil's got weird hours, by the way. They close at 2:30 Eastern time. So that's when it actually gets reported. However, it sold off even past that. Electronic trading continues past that, is the easy way to say it. About oil. So you got the Iranian sanctions. Turned out they're really not that kind of sanctions anyways. Trump just gave them new waivers so Iran can sell even more oil than we were going to initially put on them. That didn't come up in the headlines too much today. So these Iranian sanctions really aren't really much of a big deal anyways. They didn't come up in the headlines because that would not be very favorable towards the message of that side of the politics there. So if you're looking at anything energy related, besides the natural gas, which had a great day yesterday, just a little bit off today. The Explorers and stuff, just down a little bit, about 1% there. So that's it. If we get into individual stocks, there's not a whole lot because everything just kind of sloshed around on the plate today or trended slightly higher. Marriott reported earnings better than expected. Here's the thing. Every category has its focus. Netflix is subscribers. We'll talk about Pandora in a second, and that's revenue per subscribers. Hotel chains that actually don't just lease the building, but actually operate the hotel, they call them hotel operators, They go by revenue per available room, right? Revenue per available room is what they call it. They use the acronym. And so that was lower. They also cut their forecast on that going forward. So revenue per active room, a little available room, a little bit lower. And that hurt Marriott. It's unfortunately not doing really well, down 16% on the year there. So some other stocks you might be interested in that at least showed decent movement today, whether it was positive or negative. CVS up about 6% on the day. They reported earnings and revenue, basically everything expected. Same-store sales grew by 6.7%. For retailers, retailers focus on same-store sales, comparable store sales, those data metrics there. So if they could beat on revenue, beat on earnings, but if the same-store sales are lower, that usually punishes the stock. Thanks to CVS, everything is good there. Pandora up 4.25% today. So this, we just mentioned this a second ago. 50% improvement on their subscription revenue, which is good news because they're being bought right now by Sirius. So Sirius is going to add them to the mix. That stock was higher by almost 4% on the day as well because it shows that they're buying a growing and possibly an interesting product. Some names we just don't talk about that often, but we're going to do it today. Avis Budget. So if you've ever rented a car, Avis is the same as Budget. They own each other. They own a few other brands as well. Ticker symbol is CAR, car. Clever, huh? That's pretty clever. So they got they missed earnings by like 20 cents, 21 cents, something like that. Boy, did they miss. So not going well for them. They also lowered their guidance, all that bad stuff that you don't want to see happen. And so you got a loss of 35% on the year. Look at that chart. I mean, you can go back. This is January. So right here, this is the beginning of the year. Oh, no, right here, the beginning of the year. If you go all the way down to what happened today, that's 34% that it's down. They got a lot of work to do there. Toyota Motors. This stock's actually not traded here in the States, traded in Japan, but we do get to trade. It's called depository receipt, ADR. I forget what the A stands for. It's an ADR. Traders just say ADR. You can trade it. The volume's there, but you just know that you're sort of trading something that doesn't exist in this. It's not traded on this exchange. It trades in Japan. Anyways, that's not interesting. Toyota, they raised their operating profit thanks to a weaker yen. Makes sense. They're in Japan. The stock was up about 2%. A couple other things. Starbucks breaking to new highs today, continuing to move from its earnings announcement. That puts it almost to 13% gains since it reported their earnings. So that breakout continuing there. Remember, the analyst from yesterday has got a $75 price target. I bet he's happy today. This will not go to $75, by the way. I'm not allowed to say things like that. But it's not just going to go straight to 75. So if you own it, expect it to take a break. It would be actually better if it would take a break for you. Mylan, this is the EpiPen company, along with other generic drugs. 16% gain on the day. They see strong sales in European markets. In emerging markets. That's what it was. Earnings beat, revenue missed, but really, really, really strong sales. If you ever get a chance, this is the company with the EpiPen dilemma, where they were asked to reduce the price of the EpiPen, the generic EpiPen. They charge ridiculous amounts for this thing. And the CEO went, American Depository Receipt. Thank you so much. That would have killed me. Anyways, the CEO went to Congress. Rude as can be. She was so tough on these people. I sort of applaud her for what she did. She had to fight the argument of, did you not just fly here on a private jet with possibly a tailing private jet empty so that she could make sure not to miss being at this meeting? And she just brutalized them. I mean, it's probably a couple years old by this point, or maybe it was earlier this year, but it was just so cool to watch. Ralph Lauren, down I'll call it 7% on the day, heavy volume. Sales lower in Europe. So any of the European stores were lower. The key there is Ralph Lauren. See, when you say the name, does it sound American? Ralph Lauren, right? They got a big European exposure. 40% of their stores are in Europe. And that's correct, even though I slowed down a little bit. I was thinking of something else. 40% of their stores are in Europe. So slowing sales on 40% of your business is not going to be good news. They'll figure it out, though. Under Armour, 2.5% lower on the day. Look, I told you yesterday, the company announced, or they sent an email out to some of their guys that they were not going to allow expensing of strip clubs anymore on the company card. And we sort of joked about it. Obviously, it's not funny, but it would be kind of funny If when Under Armour reports their next earnings, if they beat on earnings, beat on revenue, and said it was thanks to cost cutting, could you imagine what the media would do with that? I hope that's what they say, that they beat on revenue because of cost cutting efforts. That would be hilarious. So we'll keep up with it. That's a story you just don't forget about anytime soon. All right, elsewhere. A lot of quiet, right? Semiconductors, we need that for a higher market. We had that today. Banks, we need that for a higher market. We had that today. Now officially right smack into the downtrend line. If you're a technical trader, your banking stocks are not the place you're going to make a major trade or decision over the next couple days. You've already done that if you participated, and now you're expecting or hoping that it takes at least a little bit of a break. If you're a bull, if you're a bear, this is your moment to, I don't know, hope for a pullback. From there. We're going to find out, that's for sure. Let me look at a few other things and we'll take some questions. Okay, there we go. Regional banks also back into the downtrend. They're performing a little better, in my opinion. REITs, you got REITs higher today. You got bonds that were a little bit, interest rates were a little bit higher. REITs were able to still participate in that mess. Healthcare a little bit higher today. All of this repairing. So when I point this out, this is not like, oh, this was energy was higher today, or some of the energy stocks higher today. That doesn't mean buy them. It doesn't mean I'm saying that they're good stuff. It means what I'm pointing out now is the repairing, right? The repairing of all these sectors. And like I said, the leash comes off tomorrow. Consumer discretionary stocks up a little bit today. And let's look down here below. Oil, of course, lower oil related. Gold down a little bit. And that's pretty much it. Home builders taking a break. They had a great move off these lows here. So if you're following home builders, today they did nothing, and which means you do nothing as well. And emerging markets basically took the day off as well. I don't have anything exciting to say there. So that's basically all I have for you. I said earlier you'd count the number of days the market's been trending down versus 293-day stat. In the Dow show. Yeah. Something else we would go over today. I think it was all the stats from the beginning. If I forgot something, I am sorry, Robert. It was the stats, the market performance stats there. Yep. Do you have any clients that did so well they live off dividends? They did well in their business life, right? So they have gotten to a point where they're now retired and use their earnings over that time to live off the dividends. Yes, and I've mentioned one of them before that really likes Verizon, the stock Verizon. Apple, yeah. Well, I mean, you know, I'll use the same word again for Apple, repair, right? Apple repairing from some of that downturn there. Look, if Apple cracks, in my opinion, you've got everything else that's pulled back. If Apple really pulls back, that might be the sign of maybe some slower times in the market, because you've got, remember, we watched this happen this whole time. We even did a whole class for our customers how different areas of the market were cracking at different times. But everybody was looking over at the FANG stocks and Square and Microsoft. And meanwhile, the rest of the markets were cracking. And I did a class for customers where I showed every single sector. And I go, look, the market's here. We showed it on the charts. Here's consumer discretionary. Here's tech. Here's all this other stuff. And we were making that argument. Something's wrong. Right? You need to adjust. Anyways, can you explain what bonus issue is and why there's a share price got split in half after? I'm not sure, Eric, which one you're talking about. Everyone's different. Let me know. History say the clients are retired off dividend. No, financial investor, I think what he was asking was, do we currently have any customers who have said, this is what I would like to do. I'd like to live off the dividends. Did we get them there? No. Yeah. If that was the question, then the answer is, of course, no. Yeah. Zachary, silent watcher. Good channel to keep up to. Oh, thanks, man. Good. Thank you. Thank you. I can't really comment on individual stocks. And actually, I didn't even look at. I don't have any news to give on this one just because I didn't see it today. I sort of got bored with the market and what was going on today because it was just like a handful of things going on. Thank you. Yeah. Paul, yeah, it was. Yeah, I believe so. I believe you're correct, and it was, to me, better than any TV show you could watch. It was great. Is there a good online shop for pertinent stock-related info news like your charts, impact of sanctions, trade tariffs? Is there a good online one-stop shop? I don't, no. I don't. I mean, if there is, I don't know. of any. I just kind of let it suck in from everywhere. I'm always looking at stuff. So a lot of platforms, when you look up a symbol, there's the current news right there. You could set it up to where, for example, Under Armour. If you were to search Under Armour, you'd see a string of news there. So you get an idea real quick, what's going on. Yahoo, you could use Yahoo. I'm honestly not a fan of Yahoo. I like your Nasdaq suggestion better. Best place to put money when saving for a home purchase? Ooh, that's a tough one. If your home purchase is in a short term, 2-3 years, something like that, it is not the market, right? You want to look at high interest savings account is probably where I would start. You've got some help there. Marcus is up to 2.05 now, huh? Good. Perfect. They were at 1.9 last I heard. So short-term time period, high interest savings. Don't take any risk with it. Just slow and steady on that one. When a company issues bonus stock and their share price changes from, let's say, $10. Oh, you mean a reverse split or a split? That's what you're talking about. Nothing changes on that, by the way. We actually, I've done videos on that, the split. Where you might have a reverse split. The stock goes from $5 to $10, and the number of shares gets cut in half. That's all it is. Nothing changes. You basically just wake up with either half as many as shares or whatever the split is the next day. That's all it is. And then the price changes, of course. Thoughts on the steel industry? I think the next quarter, to be honest, is going to be big for them. They kind of were able to say 28. They were kind of able to say that they passed on some of the costs right now. Obviously, any tariff news is going to be great, but I think the next earnings cycle, when normally steel stocks we don't really talk about, they just kind of come out, and aluminum too. They come out with earnings, and it's like an afterthought. I honestly kind of think the next earnings cycle is going to be big for them, because how did it how is this tariff thing really going? We'll see. Yeah. Cool. I guess I got it. Okay, so theme of today, midterm elections. If you're a long-term investor, the stats are there. You're really not going to change anything based on what happens today, although all you're going to hear about is how midterms are going to change the economy and the overall market, right? I mean, what are you going to do? So we'll see what happens there. I think the polls first polls start closing soon, so it's just going to be all over TV. We'll cover it, of course, tomorrow. What do you think about Lowe's closing the stores? I like it, and it seems like investors like it as well. The stores that they're closing are underperforming. So a lot of times when a company says we're closing stores like Sears or Toys R Us, it's because things are going wrong. These guys are just saying we're cleaning up shop. We expanded, and we sort of did this shotgun, like blow stores everywhere. They have way too many stores, in my opinion. They have way too many stores. I actually think it's way too costly, but I think they could take those locations, turn them into like strip centers, and sort of reduce the size. Like if Home Depot or Lowe's figures out that they could do like an Ace Hardware, like Walmart did it. Walmart had the massive stores, and then they're like, hey, let's do a neighborhood market. If those guys figure it out, they could charge a lot more for those things. You ever go to Ace Hardware and you want a paintbrush and it's like $17? You go to Lowe's or Home Depot, it's 99 cents. Things like that, huge margins there. Obviously, it's a huge cost, but I think Lowe's is doing the right thing from what I've seen. The stores that they're closing, love it. I love it, love it, love it. And the CEO is getting like trial by fire, and he's totally handling it really cool. So anyways, that's it. You had some calls. On the habit? Cool. Cool. Well, hey, that's all I have for you. We'll wrap it up there. I appreciate you guys watching. If I helped you in some way, maybe you'll hit the subscribe button. I think you will. That'd be nice of you. Anyways, we'll be back tomorrow to do this all over again, cover everything that happens. Expect volatility. If volatility hits the markets tomorrow, it is not the day that you are going to panic and go, oh no, something's wrong. Midterms. All right. We'll talk to you guys later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.